Hello and welcome to interest.co.nz. I'm Gareth Vaughan with our overnight news wrap, 90 at 9, and we start today with news that Japanese-style deflation is being talked about in the Eurozone following weak GDP figures overnight. Gross domestic product in this 18-member currency bloc was flat in the second quarter compared with the first, which translates into a 0.2% growth in annualised terms. That's down from 0.8% in the first quarter. German GDP shrank 0.2% from the first quarter, and the French economy stagnated for a second straight quarter. European share markets fell, but government bonds rose. Yields on 10-year German bonds dropped below 1% for the first time since Bloomberg started tracking the data back in 1989, and there's now talk of potential for quantitative easing from the European Central Bank. In brighter news in the US, shares in Warren Buffett's Berkshire Hathaway traded above $200 for the first time. Buffett has tied the company's fortunes to the prospects of the US, and he says a high share price presents a barrier to entry for short-term investors and encourages shareholders to think like owners. However, elsewhere in the US, the Federal Bank of New York said household debt fell in the second quarter for the first time in a year as mortgage originations dropped to their lowest level since 2000. And in China, gold demand shrank in the second quarter, with purchases down 52% to 192.5 metric tonnes versus the same period of last year. This is leading to suggestions gold prices will drop through the second half of the year. Back home, ASB's latest quarterly housing confidence survey shows a net 49% of respondents expect house prices to increase. That's similar to the previous two quarters, but down from 63% early last year. Meanwhile, sentiment about buying a house has fallen, with a net 11% of respondents saying now is a bad time to buy a house, which is the worst sentiment since October 2007. And over in Britain, sales and inquiries in the London housing market fell at their fastest pace since the onset of the global financial crisis in July, according to a survey by the Royal Institution of Chartered Surveyors. The group said policy initiatives adopted by the Bank of England in recent months, plus heightened expectations of rising interest rates, have combined to have an impact on sentiment in the market. The survey now predicts 4.6% growth in London house prices over the next year, down from 9.3% in March. I'm Gareth Vaughan at interest.co.nz, and that's 90 at 9.